Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right. Happy Monday.
Yes, sir. Monday all day.
Monday. Good news is bond market is doing better today. So things are improving a little bit. Let's just hope we stay on this pace for some improvement. We have lost about 50 basis points on the bond market since the Fed cut. How do you like that?
Right.
So
Yeah.
when you and I are telling people that rates could get worse after a Fed cut and they think that we're lunatics, the proof is in the pudding. Happened the last 3 times.
We got another one coming in December.
Well, we would like to have one coming in December. I don't know what the chances are because every time I pull it up, the odds are a little different. So I think they are slowly improving. But when you have Jerome Powell saying that he's more concerned about inflation than he is about interest rates, that could halt things a little bit longer.
Absolutely.
So we'll see. Well, the hot topic right now, we've got two hot topics. One is 50-year mortgages. The other is portability, meaning that you are currently sitting on a 3% interest rate. We call it the golden handcuffs because
Yep.
it's keeping you from getting into the next home because you have resistance against a 6.5 rate when you're sitting on a 3% rate. That
100%.
makes sense to a lot of people. So now there's talk about introducing portability of the mortgage, meaning that you can take that mortgage from this house and use it and pay the difference that may be owed from one home to another and port that in, much like an assumption would be on an existing mortgage.
Yeah.
Now, I got my feelings on this and I'd love to hear yours, but in my opinion, there's no way that they're going to make that come true because each mortgage is its own contract and the mortgage is tied to the property, not the person. In other words, even when you're locking an interest rate in, if you go to buy a home, you lock that interest rate in and that deal falls apart before you go to closing, you got to reapply for a different mortgage because it was tied to that property.
Right.
Even if rates change, they change. So porting that, the other thing is that I don't think mortgage-backed securities are going to fall for it. I don't think that they're going to want to port a 3% interest rate for eternity. I think that they need to churn that money and banks keep moving money around so they can recoup it to lend more money. And if it never pays off, there's not enough money to lend. What's your take,
Well,
Mr.
I think
McNamara?
there's plenty of money to lend. I don't know that running out of money is the problem. So there's split this portability thing in half, right? They could change the rules going forward easily, right? Create some legislation, FHA, VA, USDA, even most conventional loans are conforming, right? And they conform to what the federal government in its various forms says that it needs to be, right? So they could come up with something to say from X day forward, mortgages have portability and here's the rules around it, right?
I do agree with that, but you're not going to go back and rewrite all those contracts that were written in 2019, 2020, and
Well,
20.
I beg to differ. I beg to
Well,
differ. And because there is a history of the government changing the rules across the board.
okay. Give me an example of that.
I'm gonna give you one clear example, and I found this out probably about 6 years ago when I was sitting in an attorney's office at a closing. And the
Okay.
attorney literally read the part of the deed in downtown Orlando that stated that Black people could not own that property. It stated it clearly and legally in the deed. And when that deed was written in 19 or 18, whatever, that was true.
I understand that,
Okay.
but deeds
So
can be changed.
not, but the deed still says it. The literal deed, you can go pull it up in public record. It still says it. However, there's a law that supersedes that says you can no longer do that. So there is a precedent that says the government can change the rules and make it blanket and retroactive. Now, will they? That's the bigger difference, right?
I
Will they?
think that it becomes far more complicated, and thank God they made changes like that
Of
because
course.
that would be a horrible thing to move forward into the future. And the world is a different place today than it was back then. And
Absolutely.
praise the Lord for that. However, going back and redoing every contract that exists, because nobody's going to want to port a 7% interest rate. They're going to want to port the 3% interest rate.
Of
But that
course.
means that banks got to carry that 3% interest rate into perpetuity. And I don't see that happening.
Well, I think if you look at it, right, the bank, when they put out that money, let's say they put out $300,000 at 3%, right? That amortization is expected to go all the way to 360 months. Now, I know that they probably bank on it not going that long, right?
Of course
But
they do.
but the agreement individually, one person to the bank, is that it can, right? So the bank's hedging the bet that it won't, but individually, each person can go
Yes, they
all the
could.
way out to the end, right? So the bank is still going to get all their money at the rate that they
Agreed upon.
right? And they borrowed that money at 1.5% and lent it at 3%. So there still is a profit in there for them, right? And then they most likely, when somebody buys and ports their mortgage over, they're going to have to also have they're going to do something else. They're either going to bring a lot of cash to the table or potentially get a second mortgage. That second mortgage would probably be at today's rate. And also, I would think it would be fair that the government would require there to be a fee, right? So it's, hey, bank, you have to let them port the mortgage, but you can charge them 2 percentage points on the loan because it costs you money to do it and you're taking additional risk and blah, blah, blah. So, you get a fee, you get some function that gets you money, and then hopefully you get that second mortgage at the current rate. By the way, they do this in Canada.
Well, they don't do it in Canada. They have 5-year term mortgages, and they do it in the UK.
They do it in the UK.
In Canada, you remortgage even on the same home.
Absolutely.
They're 5-year mortgages, so you have to remortgage and renegotiate your interest rate. That interest rate doesn't stick with you forever.
That's true, but they do allow you to port in Canada. There is portability. It's different than it is in the UK. But you're right; they do force you to refinance every 5 years or recast every 5, whatever.
Well, they even have mortgages in the UK that you don't even have to make payments on. It's like a line of credit, and you can just let it go up and up and up, as much like
we have those too. We call them reverse mortgages.
We call them reverse mortgages. That's right. Well,
hey, listen, you know what? Here's the good news. Whether the 50-year mortgage ever comes into fruition and whether it ever helps any one individual person, or whether portability comes into fruition, here's the cool news. We're having conversations about how to adjust our market to the current reality, right?
Yeah. At the end of the day, the current market is only a short-lived thing, and we will be different tomorrow.
We will.
It always changes. So that mortgage, and I can understand, yes, the government could make changes, but you'd physically have to change the way mortgage-backed securities are traded. You'd have to change every contract. And I don't think that's going to happen. I think that this is just a way to go, hey, what kind of things? And I think you're on the right track. We're talking about it. So talking about it might help solve some solutions. Could there actually be portability? I think there could be moving forward, but I think it'd be very difficult to do moving backwards.
I agree. I think moving forward is super easy. I think that, not to say super easy, but they could do it, right? It can happen. It's not a hard function. But
and then for the 50-year mortgage, we know that 15-year mortgages are the cheapest interest rate, then 20,
correct.
then 30. So what's a 50 going to be? So if today's interest rate is 6.4, what's an interest rate on a 50 going to be? 7%? And then you mix that 7% in, even if you amortize it over an additional 20 years, which is 600 months overall, it only drops the payment on a $400,000 mortgage by about $136 a month. Now, that $136 may make a difference in you qualifying or not qualifying. Sure. And if that is the case, then I may encourage you to do it, because I think you're better off to be in the game and home ownership than to continue to rent, because that's 100% interest rate. So I encourage that to happen. And people don't typically keep their mortgages for that long, 5 to 7 years on average. That's about it. So you could always refinance it. So I think maybe if we introduced the 50-year mortgage, but did it on a 5-year arm and got that interest rate so it was competitive with the 30-year interest rate, but maybe on an arm or a step-up type loan, that might work as well. So having dialogue, I think, is important. I think you and I discussing this is important, but I don't think the government's listening to our podcast right now.
You don't think?
Well, they
I don't
might.
know, man.
They might.
I don't know.
I mean, we
I
are
got pull with
important.
Pulte. I got pull with Pulte, man.
Well, you know what? The guy's a smart guy, and I think that he is on a mission with Trump to figure out how to combat affordability. And I think that the economy will combat affordability when it gets a little better. That's what I think. And if we can fix the economy, we don't have these problems anymore. We're back to normal.
True. I mean, it was only 4 years ago that people were paying $50,000 and $100,000 over list price just without any problems. I don't know where all that money went. I don't know where it came from, and I don't know where it went.
Now they're scraping to come up with 3.5% to put down. So where'd all these cash buyers go? Well, I'll tell you where the cash buyers go. The cash buyers come out when the deals come out. That's when they come out. And that's smart. I wish the general public would see that, because it goes back to the phrase that be greedy when others are fearful and be fearful when others are greedy. Cash buyers can get greedy when you're fearful and they go, uh-oh, I see fear in the market. That's a buying opportunity for me. But the general person is the one that's like, yeah, I'm the one in fear. I'm not going to do anything.
Correct.
And they missed the opportunity.
Absolutely.
What a great conversation. So I don't know if we solved anything, but we sure did put it out there for people to think about. If you have questions about it, if you need to get approved for a loan to buy, refinance, home equity line of credit, give me a call. I lend in all 50 states. My friend Tom can help you purchase or sell a home in all 50 states. If you have questions and you're in real estate for us, give us a call. We're happy to help you out. If you're looking for a great real estate agent or a lender, we're applying for the job. Hope to hear from you. Thanks, Tom.
Yeah, Bruce, you have yourself a great day.
You do the same.